Hi, everyone. Thanks for joining today. My name is Or. I'm one of the co-founders and CTO of Skyline AI. And today I'm going to tell you about how AI is already disrupting commercial real estate. So, before this talk, we had Tamir Pato speaking, and he talked about saving lives with technology and AI. And we're about something which is just as important, which is saving money. So for the past 10 years, to make a good return with real estate, all you had to do was to invest. It wasn't that hard. We were there. But actually, in the last few years, it's becoming a lot harder. So we're seeing cap rates shrinking, interest rates rising, and a lot of investors are having a really hard time to find those best deals as they did before. And this is a problem that the real estate industry refers to as dry powder. So money which is committed to real estate investments, but sits there idle, not being invested. And the numbers actually tell the entire story. So we have almost $200 billion of dry powder just in North America. But how does AI come in? How can we use this technology to release the dry powder? So what if I told you that a machine could be trained to basically be superhuman in whatever is required to perform a really good real estate investment? What if I told you that a machine could actually scan all of the different markets in the States? So hundreds of thousands of properties, thousands of markets, tens of thousands of submarkets, and pinpoint the markets which are growing fastest. What if I told you that the machine could actually dig deeper into those submarkets and identify the neighborhoods and actual individual assets which are more interesting there? What if the machine could construct virtual portfolios of assets using things like fundamentals and demographics? What if the machine could predict which are the best tax consideration assets to invest in? What if it had an AI algorithm that would detect assets which are going to be marketed soon? What if it had an AI value prediction algorithm that would tell you what the asset is actually worth to help you get an arbitrage opportunity? And what if the machine could actually completely underwrite an asset within just a few seconds? Tell you everything there is to know about the owner, things like the owner's acquisition versus disposition, the owner's geographical preferences, who are their favorite management companies, what is their leverage, what type of assets they invest in. What if the machine could actually reverse engineer the owner's strategy by looking at their trade history? And what if the machine could actually tell you what the asset's market value is, not just the economic value, how much you could sell it for? What if the machine could let you know what are the KPIs of the property, so how the concession, occupancy, market rent growth will look like in the next few years, and what the demographics around the asset will look like? What if the machine could actually give you the geospatial footprint of the property, telling you what area you could cover by walking, driving, or riding your bike? What if the machine could cluster groups of similar properties automatically to perform a comp analysis and show you where you could take your assets versus other assets in the neighborhood? And what if the machine would also be able to analyze the market, telling you how the cap rates look like there, how the investor splits look like? So do you see like a trend of institutional investors exiting or entering this market? What if the machine would also survey supply and could tell you what are the units that are going to be released into the market in the next few years and model the supply in your supply-demand model? What if the machine could also tell you where do people work there? What are the crime rates? What are the natural disasters and environmental hazards around the area? And what if the machine could finally use all of this information to automatically underwrite each and every property in the States to basically provide you with the full institutional grade underwriting business model, showing you things like where the IRR would go to cash on cash, what the debt schedule will be. So this is the same kind of report that usually takes a couple of months to gather in a large institution. So what if I told you that this already happened? So in June of last year, Skyline AI actually performed the first AI-driven real estate transaction in the world, acquiring a portfolio of 2 multifamily buildings in Philadelphia for $26 million. And in this deal, our algorithm picked up positive net demand in this submarket of Philadelphia. We utilized our soon-to-market detection algorithm. So this is something really interesting. So using tens and thousands of different data points, given a specific property, we're able to classify whether this property will go to market in the next year or not, using things like the debt history, the owner, and stuff like that. So we were able to pick up those 2 assets in Philadelphia using this. We used our anomaly detection algorithm to basically see that the asset is not performing as well as it should be. So compared to its immediate environment, the asset was not performing so well. And we also used our AI value prediction to basically know that we can get the asset for a significant discount to market. And the way we use this technology is by partnering with some of the world's leading real estate investors. So we're not licensing this. We're not basically data providers or data licensor. Instead, we partner with some of the world's largest real estate players in order to design investment vehicles augmented by our AI technology. So a few examples of that are JLL, one of the largest real estate companies in the world, Greystone, one of the largest private lenders for multifamily in the States, and since we're in Germany, DWS. So a few months ago, we announced our partnership with Deutsche Bank, Asset Management, DWS, and we're currently working on combining their real estate know-how with our AI know-how to basically deploy billions of dollars into the real estate markets using this technology. But how does this scale, right? So we have seen how this technology can pinpoint specific assets and make hopefully good investment decisions. But usually, when we're talking about establishing funds with some of the largest players, we need to show how this scales to more than just one asset and to have a statistically significant sample. So what we do is actually develop this simulator, which shows what kind of investments our partner would have if they had access to our technology at the time of their portfolio. So what you see here, this is a random portfolio of assets acquired in 2015 and that were sold since then. And this shows what our AI value prediction would basically advise the private equity that we're working with if they had access to that technology at the time. And you can see that in some cases, we actually saved them for making a few bad deals. And this, on the average case, lifts the IRR of the fund in about 40%. So hopefully, hopefully you found this interesting. And if you guys have any questions, then definitely feel free to catch me after the talk.